and welcome to FX Addicts Weekly Market Analysis. This is Tim, the Currency Professor, and today is Friday, July 26, 2013, ending out another wild week here. Third week in a row for the dollar getting beat up, and we've had some action. So let's first hit some of the economic data. Today we had the University of Michigan consumer sentiment numbers out. 85.1, much better than they expected. 84, and a lot better than the 83.9 from last reporting period. Now this is the highest that we've seen in several years. So here we are, we're starting to get some momentum again with the consumer. We see it in many things. We've seen it in a lot of reports lately for the consumer. So this is a good sign. It's slowly picking up. It's not going down, so that's encouraging. We've gone through several years period here of numbers going up and down, and now we're starting to see a little bit of momentum to the upside from the consumer side. And that's the most important part, is because the consumer makes up just about the 63 to 70%, somewhere in that range, of the U.S. economy. And globally, pretty much around that 60 to 70%. A few countries a little bit less, few countries a little bit more, depending on their political and social structure. So we always want to see those numbers from consumers, that the consumers out there and they feel confident and that they're buying things. So next week we got a full docket of economic news. Starting on Monday, out of the UK, we got M4 money. Now occasionally this is a good thing to look at, because this is a very, very broad-based, the broadest based money supply that we can have, and this really gives a longer term view of how much money is in the system. And if we're seeing growth in that, then there's a good possibility that we'll see growth in the economy. So out of the UK, M4 money is expected to show 0.2% increase, as opposed to the last period, which was a negative 0.1. So we want to look at that though over a longer period of time and see if we're increasing. So that will be one thing to watch. Also on Monday in the U.S., pending home sales expected to be down 1.1%. Last month they were up 6.7, so a little bit of a decline, not too big of a deal. On Tuesday, GfK German consumer climate, again another kind of consumer type of sentiment indicator, expecting 6.9. It was 6.8 last month. In the U.S., the Case-Shiller index coming out, expectations for 12.4% pricing increases there. So that's getting pretty hefty there. So we're going to have to watch that. And then also on Tuesday, the Conference Board's consumer confidence number expected to be 81.1. This is another very broad-based, very looked at consumer numbers. So very important to see that. Then on Wednesday morning, out of the UK, the GfK consumer confidence expected to be a negative 19. Now this has been negative for a very long time, so if we can see it bump up a little bit, that would be good. Last month it was negative 21, so this month if it comes in at negative 19, that's an improvement. Also on Wednesday, Europe's unemployment rate expected to be 12.2%. Another new high if it does hit that. And then on Wednesday, also in the U.S., ADP non-farm payroll numbers, and looking at about 179,000 as compared to last month's number, which was 188. So that's going to be a precursor to Friday's non-farm payroll by the U.S. government. Also on Wednesday, we get U.S. GDP. Very big deal. Everyone's going to be looking for it. The estimates have been revised lower and lower, so now the forecast is 1.1%. This is for second quarter. The first quarter was 1.8%, revised down from, I think, originally reported around 2.5. So, and then this estimate for the second quarter has also been revised down. A few weeks ago we're seeing about 1.8, 1.9% on the general consensus. So very important that we watch that. Also on Wednesday, the Chicago Purchasing Managers Index, expectations to see a little bit of a jump there of 53.7. On Thursday, quite a few PMI numbers out of Europe, and also out of the U.S. So we're going to watch those. Most of them are expected to be above 50, with the exception of the Italian manufacturing, which is just supposedly going to come in under 50. So we're going to watch those. In the U.S., the final manufacturing and the ISM's manufacturing PMIs come out. Those are very closely watched. In Europe and the UK, first, both Europe and the UK have their central bank meetings. So everyone's going to be watching to see what they're going to do there, if anything. And then also in the U.S., total vehicle sales. Now last month they were 16 million. This month we're looking for 15.8. This is another indicator of the consumer and how well the consumer is doing. So everybody seems to be watching this very closely now. Then Friday is the big kahuna, non-farm payrolls and unemployment rate for the U.S. Expectations 180,000 off of last month's 195,000. So we're going to be watching two things here. We're going to be watching the revision to the 195,000, and we're also going to be watching the new release at 180. Unemployment rate expected to tick down a little bit from 7.6 to 7.5. Those are going to be very important numbers to watch. And then also at that same time we get personal spending and personal income. So those are probably going to take quite a back seat to the payroll numbers, but nonetheless it's still important. And then at 10 a.m. New York time on Friday we get factory orders. Expectations 2.3%. So that will need to be watched as well. Okay, on to the technicals. Very wild week. Euro US dollar today up 10 pips right now. Now the second day in a row. We've been up now 3 weeks in a row here. The dollar again just getting hammered, and euro climbing up. So we are up here. We're up here about just under 133. So we're pushing ever higher here. Looks like we could run all the way up to the 134 level maybe early next week. We have, again, a lot of reports out, so a lot can happen. If we look on the weeklies here, we can see how we're pushing up here towards this upper end. We're still in this range more or less, and it's still bouncing around. We could even extend the range up here to that 120, 137 level. So all in all, it is range bound. There's no real direction here. If we look further out on the monthlies, we've been in the same range now for the last 6-7 months. So again, no real direction, not really looking like it's going to do anything spectacular. If we were to rally, we should have rallied earlier. We should have rallied about 4 months ago and made some new highs here, and we didn't do that. So the failure to do that is a negative, and we could sell off very easily from that. U.S. dollar and the British pound here, pound dollar, right now unchanged on the day, and for the week here we're up, but we're still pushing some levels here where we're starting to get into some resistance points. So maybe we pop up on an intraday basis up to about 155, maybe even 155.50, and then we could come right back down. If we look here on the weeklies, third week up in a row, very strong. But we're coming off of new lows that we had made down here in the 148s. So really don't expect this to be anything more than probably a dead cat bounce. And if we look here on the monthlies, again, same kind of stagnation that we saw in the euro against the dollar. We're seeing that here as well. In this case, we got a little bit more to draw upon. We have this trend line that we are below, have been below, and this huge sell-off way back in 2007, 2008. So that really weighs on this, and really what should happen is we should continue lower. If we do not continue lower sometime soon, that could signal a turnaround here, and we could move up to get out of this range and maybe even get up into the 170s. That's a very, very remote chance, but that could happen. More than likely we need to go down to the lower 140s to test that level before we can go up and make new highs. U.S. dollar against the Swiss franc, just getting hammered all week. We're down another 25 pips today, down under 93, and we're probably coming to a point here at which we're going to bounce, and maybe even bounce significantly, and quite possibly form a bottom. Now if we go further out here, we look out on these weeklies, we can see how we're really range bound. We have been range bound ever since 2011. And we're popping around in between just about a 1,000 pip range. and we're going to sell off here a little bit, then we'll rally up again. The point is we need to break out of this, and we're coming ever closer to doing that. And we look here on the monthlies, we can see we have these trend lines. This goes all the way back to 2000, 2001, this lower one, and then this higher one goes all the way back to the early 1970s. So we're pushing on that limit right now. At some point here we're going to explode and get out of this. This spike low down here determines that we've made our lows, we've made our bottom, we've got this consolidation which is acting as a test of these lows. So technically speaking, we should now break up above this upper range. If we were to close up around 103 or higher, that would be very significant, and we would rally then quite a bit for a long period of time. That's what we're looking for here. US dollar against the Japanese yen, down again today, 2 days in a row, getting whacked about 100 pips. We're down 122 right now, around 98 even, and a lot of reasons for it, mainly going back to the carry trade in Japan, where you can go there, borrow at a very low rate, and use that money somewhere else, or money flowing back into Japan for varying reasons. And it's probably short-lived the way it looks technically. If we go out to the weeklies here, we can see how we've made these lows down here. These were pretty good lows and should stay. So we've come down, we've bounced up, we're below this minor trend line, and we've bounced off of it. So now maybe this next week we rally right back up, and then the following week we can run up and probably make new highs. We'd still be below this trend line, but there's a very good possibility we could make new highs and then carry on through at some point in the future. Now, on the monthlies, we are down for the month, but this is 2 months down. We're still hanging on to this trend line here, so it's a very steep angle. But longer term here, we still look really good. Even if we dip below it a little bit, not going to really be too concerned with it. And we're really getting a very nice correction here. So if we do end up negative on the month, I think it's a positive longer term, because more than likely we've made our correction then, and now we can go up and make some new highs. So the next stopping point would be really 108, 109 area, and looking for that to happen probably in the next few months the way it looks. Euro Swiss, just chopping around for the most part during the week, down 24 today, heading down a little bit lower now. We're in the lower 123s, and looking for probably around 122.80. maybe we get down into this area down in here, 122.75, 122.80. We could pop down there on an intraday basis and pop right back. And on the weeklies we can see how we've had these nice curved bottoms. One here, we started one here and failed. So the weeks, though, if you look at the actual weekly ranges, we're very, very small here on these 3 weeks. Very much like we've had back in here or back in here before we exploded up again. And that's the MO for this cross, is to shrink down, do this kind of very little momentum, and then boom, all of a sudden it spikes way up. So anticipating that will probably happen again. Euro yen, down today, getting hammered with with everything else here related to the yen. 150 we're down, just above 130. We were up about 132 here midweek, and has since given it all back now. But still not a detrimental issue here. Longer term, we're still looking fairly strong. We're still following this trend line. We are below it, just like we are in the dollar yen. And if we look here on the weeklies, we can see how we're just pulling back this week. Not too big of a deal. We're still got that upward momentum going. So we pull back for a week, maybe two, and then we're off to new highs again. Now on the monthlies, we are still up on the month, and longer term we still look good. There's nothing here to indicate that we're going to turn around. So we fall off a little bit maybe this month, and then next month we could very easily see ourselves rocketing up here, getting up to that 137, 138 area that we've been anticipating for quite a while. So more than likely we'll hit up in there within the next few months, probably by the end of the year. US dollar against the Canadian, down just slightly or unchanged depending on your quote service. We've been all over today. We're pushing on this minor trend line right here. Last 3 days now, looking like that's going to hold at least temporarily, and we're starting to get a little bit of a kind of a triangular pattern here where we should probably bounce back up out of here. And again, we got this nice curvature going here where it's building that momentum, so it looks very good. And if we jump out here to the weeklies, we can see that even a little better. We can see how that's just curving up here, and that's a very powerful sign. That's usually a very good sign that the market's going to really explode. So at some point here, we'll probably get to that point and see us really rocket up, and it'll do it very quickly. In 1 week, 2 weeks, we'll jump up 800, 1,000 pips. So we could easily be at 110, 111 here in a week. Haven't quite gotten there yet, but we're probably very close. Australian against the U.S. Today, up about 16 pips, just around the 93 level, and really we're hoping that it would jump up around 94, and maybe even 94.50, and it has not gotten up there. Every time we get up a little bit, the sellers come in and really beat it back down. So even though we're consolidating, it looks like we're building this nice base here. We could easily fail. It could just come off and go down and make some new lows. And if we look further out on the weeklies, we could see how really that's really what probably is setting up. We've had this nice downward pattern. Here's our correction right here, so the next one's going to be right down on the same angle, and we could see that happen maybe next week or even the week after. And on the monthly basis, well, we may end up the month on a positive note because we only have 3 trading sessions left in the month. So we could end up on a positive note, and then next month very easily could see it down 800, 900 pips. So this market is very well known for doing those kind of things. Once it gets going, and there's not too much that's going to stop it. So that is it for the week. I really ran over my time. I'm sorry about that, but there's certainly a lot to look at this week and next week. So feel free to contact me. If you're not a member of FX Addicts, please stop on by, and we do offer a 7-day free trial. Also, if you want to contact me, Tim at fxaddicts.com, and I am available anytime by email and on Skype as well, and you can certainly grab me in the chat room on FX Addicts. Thanks.